Hello, traders. Gary Wagner here. Just before 1 o'clock in Honolulu, 7 o'clock in New York on Wednesday, or Fed Day, September 22nd, 2021. And this is the Daily Report for Gold and Silver. Once the statement was released today, we saw gold rise to the highs at about 88.89. And then when Chairman Powell held his press conference, drop quickly and drop strongly, recovering somewhat into the close. It is trading overseas above New York's close, but we'll talk about all of that on today's show. We will begin today's show by viewing some of Chairman Powell's press conference.
The process of reopening the economy is unprecedented, as was the shutdown at the onset of the pandemic. As the reopening continues, bottlenecks, hiring difficulties, and other constraints could again prove to be greater and longer lasting than anticipated, posing upside risks to inflation. The path of the economy continues to depend on the course of the virus, and risks to the economic outlook remain. The Delta variant has led to significant increases in COVID-19 cases, resulting in significant hardship and loss, and slowing the economic recovery. Our asset purchases have been a critical tool. They helped preserve financial stability and market functioning early in the pandemic. We also discussed the appropriate pace of tapering asset purchases once economic conditions satisfy the criterion laid out in the committee's guidance. The timing and pace of the coming reduction in asset purchases will not be intended to carry a direct signal regarding the timing of interest rate liftoff, for which we have articulated a different and substantially more stringent test. We continue to expect that it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate. More important than any forecast is the fact that policy will remain accommodative until we have achieved our maximum employment and price stability goals. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to support the economy for as long as it takes to complete the recovery.
As expected, we saw extreme volatility in gold today. Following the release of the statement at the conclusion of today's FOMC meeting, we saw gold run to the highs, which was 1788.40. And then during the press conference by Jerome Powell, saw it tick back down and actually go into negative territory. We'll look at that on a very, very short-term chart, and we'll talk about our expectations for the next couple of weeks as it pertains to gold. One of the charts that we are going to look at the beginning of our technical study section is going to be a dollar gold chart, with both of them showing a tremendously inverse correlation between gold and the dollar. This first chart that we are looking at is a 3-minute line chart. I want to point out two specific areas. This is when the statement is released, and this is the timeline for Chairman Powell beginning his press conference. And what you can see from that is when the statement was released, that was interpreted as more dovish. They did not announce a timetable or the point in which they would begin to taper. They did say it would be soon, and that was enough to take gold to the highs of the day. However, as Chairman Powell took the stand, so to speak, for the press conference, this is simply his opening statement, that drove gold down to the lows of 1766. The market is currently trading at 1768.40. Another way to view today's action, of course, is through a candlestick chart. I've simply converted the line to a candlestick chart. You can see this is when the statement was released. And look at the extreme volatility between the high, the low, and the close, which occurs about mid-ground. But in the following 3 minutes, we had a tremendous spike. And then over the course of about 15 minutes, we saw this market hit these highs at 1788.90. Now, in terms of his press conference, Powell's press conference, that begins right here. In the first, say, 6 to 9 minutes of the press conference, it did take gold higher, keeping it near the highs. But then in the course of approximately 12 minutes, we saw it dip to these lows here and then finally bottom out. We did issue a trade alert Unfortunately, we entered much closer to the highs of the day than the low. We got in at approximately 1785. Market is currently trading at 1769. It has resumed trading in Australia, which means that we'll see how the statement and speech by Chairman Powell begin to affect worldwide markets as it moves from Australia into Hong Kong and then later on into London. This last chart that we are viewing is a short-term chart. In white is gold, in green is the dollar, and you can absolutely see the inverse correlation, and it was a really strong push in dollar strength towards the end of the trading session, which kept gold under pressure due to the rising dollar. While we kept our stop fairly tight, down at 1760, I do believe in this trade, even though it is behind us currently, and I think we will see gold rise as it trades overseas, especially into Asia and London. Maintain your long position, maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.